Hi and welcome back to my channel. My name is Malin Havefjell, and in this video I'm going to talk a little bit and try to explain the VAT system here in Sweden. So we're going to start with unfolding our board from school. So please follow me along here. So we start with looking at you who are the company owner, and we say that you sell a service to your customers. You have, let's say in this example, there are 5 customers who wants to purchase your service. And to get your service, they need to pay 200 Swedish kronor to you. So they pay you that. And on your bank account now, you will have 1,000 Swedish kronor. Everyone is happy. You have sold a service, they are happy, they have paid you, and you now have money on your bank account. Is this money all yours? No, because now the Swedish state come and say, we want some tax. We want to have tax on your income, and we also want to tax your customers for consuming your service. So this is really, really important to understand and know. There are 2 different taxes. We have the income tax, that is the tax that will be on your income, and we have the consumption tax, and that is in ordinary words called the VAT, the value added tax. So if we were looking at it just, okay, who is paying what, then we would say that your customers need to pay the VAT to the state. Every time they purchase something and uses that thing for themselves, they need to pay that VAT to the state. That can be a little bit hard, I guess. I would think so, at least. If every time when I went out and purchased something, I need to also fill out a form and hand that in to the state and explain what tax I should pay for the things that I have purchased. Okay. So we don't want to have sad consumers. We want them to be happy and purchase our service. And so the state have said that, okay, we put this administration on the company owners instead, the ones that sell this service, products, goods, whatever it is, to the consumers. So now the consumers are happy. They don't need to do the administration work, but you need to do that. Yeah, it's a little bit more work for you and you don't get any money for it, but I still think it's a better solution because you know the rules, the tax rules for what you are selling, and they don't need to figure that out for each item that they purchase or service. So instead, the states say that you will pay that VAT on behalf of your customers. Okay, all good. Except that we don't know yet, okay, what is the VAT that you should pay? And in Sweden, we have 3 different VAT rates. It's 25%, 12%, and 6%. And in my example, I will use the main rule, the general one, 25%, because usually when you sell a service, it's 25% VAT on that one. Okay. So now we need to report to the tax agency that is doing this for the state how much VAT my customers have paid to me and that I should pay to the state. Yeah, we have understood that it is 25%. So then we calculate on the 200. No, we actually don't calculate 25% on the amount that the customers has sent to you. Because when we calculate the VAT on the amount that the customers pay, we need to calculate on what's, I don't know the English word, but like a backway rate instead. And this is mathematical things, and I'm not a mathematical person, so just learn this. And if you want to understand more, then I guess you can search for someone who will explain this on the YouTube on another channel. So what we just need to know is that when we calculate the VAT on the amount that we actually received from their customers, we need to calculate on another rate. So on 25, we will actually calculate 20%. And what it is when we do the 12 and 6%, you can search. I have another video on that one. I think that is in Swedish, but you can see the amounts on that video. So if you just search for baklängesmoms in Swedish, then you will find the rates when you calculate backwards. So, okay. When we want to calculate the VAT on the amount that was paid to us, we do it with the baklängesmoms. In this case, when it's 25, we calculate with 20%. That means that for each 200, the VAT is 40. So you need to pay 40 times 5 in this example, because we have received from 5 different clients to the tax agency. Meaning that 200 of these 1,000 isn't your money. They should go to the state. So what's left here is 800. And this is actually your income. So on this amount, the tax agency, the state, wants to tax you for the income tax. And how high that is, it's really hard to say, because it depends on so many different things. But it depends on where you live in the country. It depends on what type of company you're running, if you're running a limited company or if you're a sole trader, and which municipality you live in. But in average, we can say that 30% of this, if you want to have it all in your private pocket, will be in tax. So what's left then from what you sold here and what you will have to use for private purposes will be 560. Okay, so what have we done here now? We have calculated what's called utgående moms, or don't actually know the exact correct word in English, but if we say outgoing VAT. And this is also important to understand, because all these numbers needs to be recorded separately in the different tax returns, and also because of the different tax returns, we also need to report that in the bookkeeping. So in the bookkeeping, we need to find each things that you have sold. So then we let's see which, if we we take this one. So we look at one separate transaction in the bookkeeping, and we do like this instead. So we take one separate transaction, and in the bookkeeping, we will report that we have received, let's say we received it on our bank account, 200. And of this 200, there were VAT, and our income will be 160. So for each transaction, we do that in a separate voucher and report what we received and what the reasons were for receiving this. And again, it's really important that you separate all these things in the bookkeeping, because it needs to be separately reported in the different tax returns. So this one will go to the income tax return, and this one will go to the VAT return, and this one will be in your annual report. So what have we been doing here then? Yes, we have looked at, you sell a service to your customers, they pay you 200 Swedish kronor for using that service. And then they need to pay a tax, the consumption tax, the VAT to the state, but you take care of that. So you calculate the VAT for them and report that in your VAT return to the tax agency, so and pay that amount there. So that money, first you had 1,000 Swedish kronor on your bank account, and then you took 200 of those and sent them to the state. And now you have an income of 800 that you need to pay tax on. So what's left, if you withdraw everything of that, will be around 560. And so what you can see is that if you want to have like a quick estimation, what you receive from your customers, and if you just remove half of that, then you will be on the safe side with knowing that, okay, this will be my money. And again, that depends on where you live in the country, how much you earn, and if you're running a sole trader or if you are run a limited company. So look at this for the VAT to understand the VAT. Yeah, I hope this wasn't too confusing, and that you maybe got a little bit better understanding of all the different, what you need to do. And regarding the VAT, it's a lot of things that you just need to learn. Sometimes it's hard to understand things because we don't see it in real life, like this pencil, because the VAT is just an imaginary thing that the states have decided that they want to use to receive money to the state. So keep track of your bookkeeping, learn how to do this, and practice. It will be easy when you get the hand of it. I hope to see you in the next video, and for now, bye.